What if Congress agreed to not tax a big chunk of your paycheck? For lots of tipped workers, that's exactly what just happened. Let's find out if you qualify. Now that the no tax on tips deduction is officially a thing, here's how it works. You can knock up to $25,000 off of your taxable income for the tips you've earned, whether you're on payroll or self employed. That means a smaller tax bill come April. And the best part, you don't need to itemize your deductions to qualify. Whether you take the standard deduction or not, this benefit is still on the table. But there are a few things to know. First, you must file jointly if you're married. Second, only tips given voluntarily count. So if it's a mandatory service charge, like a built-in gratuity on a big dinner party, that doesn't qualify. Third, the tips have to be officially reported, meaning they show up on a W-2, 1099, or Form 4137. And finally, the job has to be in an industry where tipping was common practice before 2025. Think servers, bartenders, valets, hairstylists, gig workers, jobs where tipping has always been part of the deal. If you work in a job where tipping is common and it was officially recognized as such by the IRS before the end of 2024, you can deduct your qualified tips from your taxable income. The Treasury Department will soon release an official list of the job categories that customarily and regularly receive tips before 2025. If you're self-employed and work in certain specified service fields, you're out. Same goes if you're an employee whose employer is in one of those fields. These specified service trade or businesses include jobs in accounting, healthcare, law, actuarial science, athletics, brokerage services, consulting, financial services, the performing arts, investing, investment management, or dealing in securities, partnership interest, or commodities. Basically, if your business is built on specialized skills or reputation, your tips probably won't qualify. So when does no tax on tips kick in? It's a temporary tax break running from January 1st, 2025 through December 31st, 2028. It starts retroactively on January 1st, 2025, so even though you won't file your taxes until 2026, you'll still be able to claim the deduction on any qualified tips you earned in 2025. But here's where it gets even better. Starting in 2026, the IRS will adjust the withholding tables. That means some workers will see less tax taken out of each paycheck instead of waiting for a bigger refund when they file. It means getting the benefit up front where it matters most, your take-home pay. Just to be clear, this deduction only applies to federal income tax. You'll still owe payroll taxes like Social Security and Medicare, and depending on your state, you might still owe state income taxes on your tips. Let's talk about how much you can get. Again, the maximum deduction is $25,000 each year. If you're self-employed, the deduction can't be more than the net income from your tipped work. And heads up, if your modified adjusted gross income is over $150,000 or $300,000 if you're filing jointly, the deduction begins to phase out. It fades away at a rate of 10% until it's gone. For a single taxpayer, it's completely gone at $400,000 of income. For a married couple, the cutoff is $550,000. These income levels are very generous. Here's the thing. In 2025, if you're single and make less than $15,750, or if you're married and make less than $31,500, you already pay zero federal income tax. The standard deduction wipes out your tax bill. So an extra deduction like the tips deduction won't help you. Now, if you do pay federal income tax, that's where deductions matter. And the higher your tax bracket, the bigger the benefit. For example, a $100 deduction might save you $10 if you're in the 10% bracket. But if you're in the top 37% bracket, that same deduction saves you $37. Now, be forewarned, some people are complaining and saying that it's not fair to other taxpayers in the same income ranges. So you may have people reducing their tips. Here's why. Let's say you're a DoorDash delivery driver making $40,000 a year, and $5,000 of that is tips. Thanks to this new deduction, you'll owe less in taxes than, say, a teacher who makes the same $40,000, since your $5,000 in tips are no longer taxed. Same income, different bill. If you work in a tip job, this new tax break could be a game changer. It's a bold new chapter in how we treat tips, and it's sure to spark debate. But all I have to say is, if you rely on tips for income, congratulations on the tax break. By the way, if you prepare your taxes yourself and are interested in saving money on tax preparation, check out the video in the upper left of the screen comparing TurboTax to Free Tax USA. Take care.